What is cancellation of debt income when debt is forgiven? That's the question I'm going to answer today. I'm Aaron Hall, a business attorney in Minnesota. You can learn more about me at aaronhall.com. And this video is subject to the disclaimer, which is linked in the description below. All right, cancellation of debt income. What is it? Well, imagine that you have a credit card and you have spent $50,000 on that credit card. Maybe you took a trip and you put the airline tickets on it. Maybe you bought some products. Whatever it is, you spent $50,000 on that credit card. Well, time goes by and you can't pay that bill. And the credit card company comes calling, collection agency gets involved. And at the end of the day, let's see, because you have no money and you can't pay that bill, the only way you can do it is if you borrow some money from your parents. And so let's say you do a deal where you're going to borrow $5,000 from your parents. And you have offered to pay $5,000 cash, and the credit card company in exchange will wipe out $45,000 of debt. So ultimately, you've paid off $50,000 with a $5,000 payment. Seems like a great deal, but here's a catch that everybody in this situation should know about. The IRS considers this cancellation of debt income, which is subject to income tax on your tax return each year. This $45,000 of debt that was forgiven is considered income to you. Here's why. It helps to understand the background behind this. You got $50,000 worth of value when using a credit card. You only paid $5,000 for it when you eventually paid that credit card bill. So of $50,000, $5,000 you paid for, which meant you got $45,000 of value without paying for it. You got $45,000 of wealth, $45,000 worth of goods or services. That is subject to income tax. Now, there are some exceptions. Let's talk about those. When is that money not subject to income tax? Well, for one, bankruptcy. If you file for federal bankruptcy, you don't have to pay income tax on debt that was forgiven. There are a couple other examples, though. Let's say that you are being forgiven debt, but there's a dispute over how much debt it actually is. In that case, there may not be $45,000 worth of debt forgiven. Perhaps there's only $5,000 worth of debt forgiven and you're disputing the rest. Well, that's a difficult situation because did you get $45,000 worth of debt cancellation or $5,000 worth of debt cancellation? These are issues for an attorney or a CPA to work through, but this is an important consideration because that will have a significant impact on your income tax bill when you file your tax returns at the end of the year. There's also a situation where you might have claims against the other party. So unlike the credit card scenario, let's say two business owners are fighting and one says, hey, I'm going to relieve you of $100,000 worth of debt, but you have to agree not to sue me for copyright infringement. Well, that is a mutual release of claims. And in that case, you may not actually have cancellation of debt income because there were claims forgiven or canceled on both ends. So how you characterize a settlement agreement is so important. We've just touched on the issues here so you can spot them to address with your attorney or CPA. But the bottom line is to keep in mind that if debt is forgiven or canceled, there very likely is an issue of having an income tax liability on your tax return at the end of the year. To learn more, See the description below, which links to an article I wrote at aaronhall.com. And if you'd like similar videos like this in the future, you can subscribe to this channel or subscribe to our email list. All of this video is subject to the disclaimer in the description below. I'm Aaron Hall, an attorney representing business owners in Minneapolis, Minnesota. Thanks for joining me here today.